Good morning. Why SBA 7A and 504 programs are quietly dominating owner-user commercial real estate. And most business owners still believe owning their building requires massive down payments, short loan terms, and balance sheet strain. And that assumption is outdated. So across Texas and nationwide, SBA 7A and SBA 504 loans are quietly becoming the most powerful tools for owner-user commercial real estate, or CRE, acquisitions, especially for medical practices, professional services, light industrial users, as well as growing local businesses. And when explained clearly, these programs consistently outperform conventional bank financing. So, what is owner user commercial real estate? Well, owner user CRE applies when a business occupies 51% or more of the property it purchases. And this can include medical and dental offices, law firms and CPA practices, warehouses and light industrial buildings, and retail and mixed use properties with an operating business in place. So instead of paying rent indefinitely, owners convert occupancy costs into equity. So let's look at the differences between an SBA 7A and SBA 504, their core differences. Let's look at SBA 7A loans first. It's up to 90% financing with as little as 10% down. It's got flexible uses. It can be used for a purchase, refinance, a build out, or a business acquisition. And it offers variable or fixed rate options, and ideal for smaller properties or complex transactions. So SBA 504 loans, typically 10% down for owner users, and it can offer long-term fixed rates on the SBA portion. And it's designed for real estate and heavy equipment purchases, but it's excellent for stability-focused operators. Now, both programs will offer up to a 25-year amortization, which dramatically reduces monthly payments compared to conventional CRE loans, which typically are amortized on a 20-year on the high side. And why these programs are dominating right now? Well, first being they have low down payments to preserve liquidity. And business owners can retain their working capital for hiring, marketing, or expansion instead of tying up so much cash in real estate. Two, fixed rate certainty of your lease beats leasing risk every time. And while leases reset every 3 to 5 years, SBA 504 borrowers lock in long-term stability and often below market rents over time. So three, inflation turns debt into an asset. So fixed debt payments decline in real terms as rents and property values rise. Four is tax efficiency. So you also have interest deductions, depreciation, and cost segregation strategies that make ownership structurally superior for many operators. And five, CPAs and attorneys are driving adoption. And sophisticated advisors increasingly guide clients toward SBA ownership structures rather than perpetual leasing. Let's look at buying versus leasing. There's a quiet math shift in there. And in many markets, SBA loan payments now approximate or even undercut Class B lease rates. And the difference is ownership is going to create equity accumulation. It gives you built-in rent control because your payments are fixed. Exit flexibility, so you'll have sale, leaseback, refinance expansion opportunities. But leasing builds someone else's balance sheet, and SBA ownership builds yours. So a common myth that keeps owners renting. Well, SBA loans can take too long. That's probably one of the bigger ones I hear. But properly packaged deals closed efficiently. And my business won't qualify. Well, cash flow strength matters more than size. And there can be projections used on SBA 7A. And conventional loans are cheaper. And That may be true, but not after adjusting for amortization and equity, which is something that gets you in the door faster with an SBA. But why a mortgage broker matters. So SBA lending is not retail banking. It requires structure, lender selection, and packaging to determine success. And a broker who understands SBA credit guidelines and coordinating with CDCs and owner-user underwriting will ensure faster approvals, cleaner closings, and optimal leverage. So here's the final thought for the day. SBA 7A and 504 loans are not niche products, and they're quietly reshaping how smart business owners acquire commercial real estate. Now, if you operate your business from a lease location, the real risk may be not exploring SBA ownership sooner. That, my friends, is it for the day. Please visit Bill Rapp online to figure out how to get a hold of me. Love to talk more about your situation. Have a good day.